Phaseouts. Now, these phaseouts apply to, as we'll see, many of these credits. And what is the purpose of a phaseout? Well, this is a gradual reduction or elimination of certain tax benefits, deductions, or credits. So phaseouts apply to many different things. First, we're just introducing the concept of a phaseout, how it works. I mean, if you feel completely confident in this, you don't need examples, feel free to skip ahead, but we're going through this, make sure that there's not a single stone left unturned here. And the purpose of this is to make sure that the only more so the lower and middle income taxpayers benefit from these credits, deductions, benefits, and higher income taxpayers pay their fair share. They don't get the benefit there. Sorry, higher income taxpayers, but that's what you get there. Now, to understand this, we're going to dive through the child tax credit and the student loan interest deduction. We will dive through these tax credits and deductions later on in the lesson as well. And the numbers here we're going to be using are not particularly accurate. This is just to demonstrate how a phase-out works. The phase-out amounts, these do change year to year annually. Again, kind of just like the credit amounts that you have to memorize, we'll have these in the resources and the memorization guides. So make sure you're memorizing those. But for our examples, we'll just be using amounts that are pre-given by us here. So we see here, year 3, the phase-out amount thresholds are these amounts. These are not likely when you're taking the exam, these are not the amounts. These are just made up by us right here. So this credit, and also we're not worried about the specifics of the credit, we're just using this as an example to introduce phase out. So this child tax credit provides a credit of up to $2,000 per qualifying child under the age of 17. However, the credit begins to phase out once a taxpayer's modified adjusted gross income exceeds certain thresholds. These are provided for you here. Obviously, a lot of them you'll have to memorize and know for the exam. The credit is going to be reduced by $50 for every $1,000 by which the taxpayer's modified adjusted gross income exceeds the threshold. So how does this work? And what do we mean by that? Well, I'll show you. If we've got this MAGI, it's just a mouthful to say this over and over, am I right? Of $210,000. So we see if we've got a single taxpayer, so all other taxpayers means anyone not married, so this is just single taxpayers right here. If we had under $200,000, we would get the full benefit. We'd get the full $2,000. If there was a maximum on this, some phase outs will have a maximum. So some phase outs will say it starts to phase out at $200,000 and completely phases out at $300,000. If that was the case, and we will see those as examples, if we see that and if we make $300,000, we are completely eliminated from getting any of this benefit. So just to reiterate that, if we make below the lower amount of the phase out, again, this would be if it's a range. This phase out just happens to be a single number. If we were below that amount, we would get the full benefit. If we're above it, we don't get any. But what happens if you're in between? And as we see here, well, we've got 210, right? So that's a little bit over. We're going to have to do a little calculation, and we're not completely eliminated. That's the point of a phase out. You're not completely eliminated from the benefit here. It's phasing you out. It's slowly reducing the benefit that you'll get from this. So instead of just saying, sorry, SOL, you're $1 over, you can't get any of this benefit, it proportionally allocates it for you. So we've got one qualifying child, so in theory, $2,000. We've got this amount. It's $10,000 over the 200. The taxpayer's income exceeds the 200 threshold by 10,000. Now, how do we calculate that? We're going to say $10,000 divided by $1,000 times $50. This is the rules. This is how it works here. We'll see another example, and we'll continue to see examples of how these phase outs work. There's kind of a few variations. So in this case, the reduction amount is $500. Original amount we could have taken is $2,000. But we have a reduction of $500 through our little calculation here. $2,000 minus $500 gives us $1,500. Very good. Wonderful there. Let's move on to another example. All right, this is the student loan interest deduction phase out. So deduct some student loan interest. But if you make too much money, sometimes you can't do it. As promised, we see that sometimes there's phase outs like we saw prior, right? Where it just says, okay, it's a reduced dollar for dollar over a certain amount, but here we've got a phase out. So in this case, if we have let's say married filing jointly tax return, if together they make $120,000, they get the full benefit because they're below the amount. If in the example they make $200,000, they make above the maximum amount, so they'd get zero of this benefit. But if they're somewhere in the middle, which we'll see, we'll kind of dish out the percentage, they get a portion of it, right? So shocker, spoiler, we see the answer here. You see it's not zero, but it's also not the full 2,500. It's somewhere in the middle, and we'll deal with the math and see how that works. So this deduction also phases out as the MAGI increases beyond specific limits. Make sure to memorize the phase out amounts. You'll see that throughout the entire lesson here. We got a lot to memorize, but once you do it, you'll get those free points in the exam. Now, the phase out calculation, we have to determine the percentage of the deduction that we're eligible for based on where our income falls within the phase out range. Again, it'd be a lot easier if it was just above or below, but we're in the middle here. We've got a single taxpayer in this situation, so we're focused on this one. They paid $2,500 in student loan interest. Maybe they paid $5,000, right? The question could say $10,000, but the maximum you could get is $2,500. So in this case, they just paid exactly $2,500. Cool, sounds good. The taxpayer's income falls within the phase out range, so we've got $75,000. You see that's in between there. Now, to determine what the phase out percentage is going to be, we're going to get a proportion of the income within the phase out range. So generally how this works is you're going to take the amount over the lower limit. So we see here, we have 75 minus 70. So what we actually have in income minus the 70, which is our lower amount. So $5,000 here divided by the total difference between the lower amount and the greater amount. So 5,000 divided by 15,000. So we see 5,000 divided by 15,000, and that gets you roughly 33%. This little squiggly equal sign is basically just saying we rounded a little bit. So if you're ever wondering why it's not straight lines, that's because it's a little bit of a rounding. So since the taxpayer's income is 33% into the phase-out range, so the math here is not too crazy, not too wild. It's just what's the percentage that we are getting into the range? We are going to lose 33% of this deduction. So what would our actual deduction be? It would be the full amount times, it's kind of like 1 minus the tax rate, if you see that in anything calculation based there. So we actually get to keep about 67%. So 2,500 times 67% equals $1,675. Now here, in these examples, what was the purpose of this? Well, first off, we're going to have to do this a lot, so it's good practice. These are going to reduce the tax benefits for higher income taxpayers. These credits are just credit deductions, just two of many benefits that are subject to phase-out rules. We'll see these throughout the exam, so make sure you understand how they work. Other benefits, deductions, and credits may also have phase-out based on our income level or filing status.
Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.